Quick question. Have you Googled anything about taxes this year? Well, if you've typed something into Google like, what documents do I need for my taxes? You're not alone. Today, we're breaking down the top 10 questions people Google about filing their taxes, tax preparation. And here's the keys. They're not technical questions. They're fear-based questions. They want to know, they're confused. So they're based on confusion. Am I doing the right thing type of questions? And so today we're going to make this clear. We're going to find clarity. We're going to give you reassurance and give you some practical steps that you can take as you go into filing your tax return. So welcome back to Paladin Financial Talk. I'm your host, Nikki Foley, and today I've invited William Nusser of Simmons & Simmons to join us.
Hey, how are we doing today, Nikki?
I'm so excited that you're here, William. So, William, you are an enrolled agent, which I might give you just a second to explain what that is. But you have prepared hundreds of tax returns for multiple years here. So just give us a little bit about your background.
So graduated the normal course of accounting degree four-year school from Washington University and kind of joined a public accounting firm and didn't really even know at that time what I was getting myself into. And now I've really enjoyed it and going through. Even myself now, I'm preparing almost 400 tax returns per year from business, estates, individual. And so what that means in an enrolled agent is our side is we're licensed through the IRS. And so the nice part about that is because it's IRS federal licensing, we're across the entire nation. So wherever you're at, we can assist you as we go through. And the good thing about that is federal tax law is the same regardless if you're in Washington State to Florida. Really, all those federal tax laws are the same. So that's what our credentials are. And all of our CP requirements in education, the IRS is regulating. So everything we do and the requirements we have is along tax law. That's what we live. And we're doing accounting, posting. Everyone that comes back to is this tax time. This is our harvest. This is our busy time. Everything we do all year in our knowledge base and education is about taxes. And that's really where we consider enrolled agents as specialty services, just tax focused.
Absolutely. And when you go back to that terminology of education, that's a big piece of what Paladin Financial prides itself on. And so our partnership with you is really important because you have and share that same philosophy. And the other thing, when you're preparing 400 tax returns, you're clearly in it. And what I'm most excited about today is you're going to be able to bring us real life examples and give practical thoughts to those that are listening today. So why do we want to cover this and why right now? Well, clearly we're going into tax season. You're living in the heart of it right now, William. But these questions that we said, the top 10 questions from Google, I felt like they reveal fear, confusion, little uncertainty, and maybe just a little bit of compliance as well.
Yeah, exactly. There's a lot of services and, I don't really consider today even a competitor with these online resources. If it's interesting, you look at the marketing in my career when it first started, even on the self-prepared piece, there was this idea that we could create an algorithm or an idea that would eliminate the accountant. Well, now if you look at marketing, what we're seeing from your TurboTaxes and those areas, what are they saying? Get with us. We got a connected professional. We have this person and they're going to handle it for you. And I think that what we're seeing that trend is, can you enter your stuff in and answer some yes/no questions and it kick out a paper return or a return to file of certain? You have no idea if you're meeting any of the actual nuances of regulation. One of the examples we had that was interesting when home office was a bigger deal, they'd ask, do you have a home office? Well, yeah. People check yes. These people come in and they've decided they wanted to work with us and we go through, we had a home office. I said, yeah, I'd ask if I had a home office. I got an office in my home. Well, there's rules of how that is deductible. And they didn't even have a self-employed operation. They were just a W-2 employee. And they thought, well, it just asked if I had a home office. And I just answered yes, because I got an office in my home. Well, there's a lot more rules than just having a computer and a desk in the corner to if it's deductible or not. And that's the scary part today. I could not advise stronger that self-prepared is it's a dangerous path. You ask yourself, would you want to perform open heart surgery on your own? No, because there's just things that you don't know. And I think as the tax law and we saw big tax act come through this summer, there's so many nuances of how that works, even when we get to some of these newer deductions.
I love you. You've teed this up quite perfectly, William. So taxes aren't just about numbers and clicking a yes/no box. They're tied to money. They're tied to real life changes. They're tied to businesses and families, future plans. And there's more to it than just clicking that box. So thank you for teeing that up. So today, if you hear one of these questions and you think, my goodness, that is me, doesn't mean you're behind. It simply means that you're normal because somebody else out there is Googling these same questions. And so if you come up with a question, or maybe it prompt you to think something else, write it down, and we'll provide you a complimentary tax preparation proposal when this is over. That means William and his team will give a proposal to do your taxes this year. No obligation if we give you those numbers and what it would look like, but it's just that easy to see how it might look if you chose to work with a tax preparer and an enrolled agent this year who really is focused just on that tax preparation. So, with that in mind, again, if you want to submit a question after we're done here or go ahead and get that complimentary tax preparation proposal, you would email us at info@paladinfinancial.com. And with that in mind, let's go ahead and kick this off, William. I'm going to ask the questions. You'll provide all the expertise here, but this one I'm just making a really easy one to start off with here. When are taxes due each year?
Yeah, so normally you would think that is an easy question, but when we really look through our layer here, we're talking January 26th. Our first tax deadline is the end of this month. We look at W-2, 1099 preparations. We parry down tax season. So if you're a business owner, you do have a first responsibility. End of this month, you better have your W-2s and 1099s out to your employees. Then first next deadline, not as much maybe up in the Twin Cities area, but here agricultural tax returns due March 1st. Some people did not realize if you pay and file by March 1st, that's the ag deadline. And then if you're a business owner that has a partnership or an S corporation, March 15th. So then we're talking March 15th, the next deadline, if you're an owner, if you're a tax matters partner for those. And then we get to what people normally think about, and that's April 15th. That's the individual deadline, the corporation deadline, and then any trust or estates that have a fiscal year end of 12/31. So April 15th is what we always kind of go to and we think about, but really, for us in the industry, we are 3 or 4 deadlines through before we even ever get to April 15th. And then if a person does have the option that they want an extensions, there's some variability there too.
Fantastic. You do, you get laser like focused on what is happening with you. And even as a small business owner ourselves, I think, April 15th, and yet I know our team is working to get 1099s out and some of those pieces. So, and this year, April 15th is on a Wednesday. So there's nothing funny about this year. Is that right?
Yeah. Sometimes there's, I think, a federal Emancipation Day that falls in there sometimes and it bounces around. We had some COVID era years where it was, I think, a July one year, then a May. And it's been difficult post then to get people back up to April 15th. As we see, I think this year a little bit more than normal. Our deadline doesn't move in the back end April 15th for tax season, but as the mail has gotten oddly slower, appointments we've had initially here, everyone's like, I really don't have it yet. I don't have my information. So then if we have people that have investments, those take time to computate. So they're looking at, maybe I'm getting those forms in February, early March. And then now we're all down, everybody in the country is down to 45 days trying to get these done. And so we're seeing that compression a little bit as we see a delay as I think every year tax code gets more complicated, people's lives get more complicated. So there's more paperwork that you need. And it's always, I laugh with my clients, you get this big stack of paperwork. You never think you need 20, 30, 40 pages of paperwork to file your taxes, which you thought were simple.
Absolutely. I know that our Charles Schwab, most of our clients are all with Charles Schwab as the custodian, and they have 3 dates or 3 waves that they're sending out, and it starts at the end of January and doesn't end until end of February. And so that really condenses the amount of time that somebody has. All right, William, next one. I feel like this is kind of a layup, but how do I file my taxes?
Yeah, so the IRS is definitely pushing more towards e-file processes, and they've done really good on the turnaround. We definitely push that today because the paper filing is almost at a crossed over a road that you're not recommending that today. And the reason that we say that is that the IRS today, if you mailed a letter back in response, we're looking at 9 to 18 month response times. Okay, so if it takes 18 months to hear back, they're just too much overwhelmed. So we're really pushing the e-file. So what that means is we are an e-file provider with the IRS. We're registered. So when you sign the return with us, it's an authorization to e-file, and it gets almost immediate acceptance that day. And that's a great way to get a receipt of what's going on. But we're traditionally e-filing, but those are through approved providers and those pieces. You have to sign up and have a registered number with the IRS to be an e-file provider.
Okay, perfect. And next question, number 3 that we're on here. Do I need to file taxes if I made under a certain amount? And really, I feel like there's a different spin on this question maybe is who doesn't need to file taxes?
Yeah, and there's a great way there. I had a college professor that was probably one of my favorite accounting professors, Dr. Tom, and he would say, it depends. If you, even as an individual, if you had $1,000 of income, that was it for the year, but it was mowing lawns for a guy and he sent you a 1099, you would have a filing requirement because you may not have income tax because you're going to be below the standard deduction. and you only have $1,000, but you're going to owe self-employment tax on that $1,000. So the IRS has two provisions. You have to have taxable income. If that's zero, and on based on standard deduction and no other provisions, then yes, you can be below a filing requirement. But if you owe tax, you still have a filing requirement. And that individual there, he may only owe $150 of self-employment tax, but you still have a filing requirement because you owe tax. So just because the old adage of the 1099 where, well, I made under 600, so I don't have to report it. Well, that's not the case, So it depends for certain, but there is a rule. There is standard deduction today. Married filing joint for over 30,000. So in theory, if you were under that, you don't have to file. But if there's refunds out there, you have to file to claim the refund. The IRS is not going to figure that on your behalf, and you have 3 years from the due date of the return to file said return to claim refund, or they're going to basically keep the refund.
I love this. When I have been listening to some of our past episodes on taxes, there's so much good, tangible information. And usually when I'm listening to a podcast, I'm walking or on the treadmill or something, and I can't jot things down. So if you're listening to our episode and you're multitasking, this might be one where you take a moment and say, all right, things like you have 3 years to take advantage of a credit, or yes, income thresholds may vary, but if you are, you might have to make a self-employment. So you're giving us some really good tangible things. Thank you, William. Okay, so can I file an extension? This came up a little bit previously. So tell us about that.
Yeah. So IRS is very lenient on the extension world. You get an automatic extension on individual and business you can get for your 6 months. So your business is going to move to, let's say you're doing corporations or partnership, to September 15th, and individual does go to October 15th. However, that is an extension of time to file the return, not an extension of time to pay. So if you file an extension and you owe taxes, when it gets to the end, the IRS is going to figure penalties and interest back to April 15th. So don't feel like, I don't have the money today, I'm just going to kind of wait. And it's important. So let's say you do owe, because one of the things we commonly see that can create probably the biggest negative, let's say you owe some money and you don't necessarily have it on hand, or you don't want to pay there by April 15th. So you're like, oh, I'll file by October. If you do not file that extension, they can then hit you with the failure to file penalty, which is 25% of the tax balance due. It's 5% per month, gets 25%. So just in that 6 months period, you can add 25% to your tax balance by not filing the extension. And so it's very important that those get done, because even though it doesn't give you an extension of time to pay, it can eliminate some of the penalties by getting the extension properly filed still by the original due date, which this year is April 15th for individual, March 15th for businesses. So there's still a lot of layers there with, oh, I'll get an extension. Well, the extension still has a deadline, and that has to be filed and processed. Now, they do automatically accept them. They do not deny the extension. They do expect you to, if you were going to owe, to pay at that time. If you don't, like I said, it increases penalty and interest.
What would I need to give you if I said I want to file an extension? How do you do that?
So the nice part is e-file provider and where we're at and being the enrolled agents, if you say, hey, I need an extension, we will process that on our end. There's not really, now if you want to make a payment with an extension, we'd have to kind of start having more documents of the return. But if you're just we have people that call in late, hey, get me an extension, I know I need it, and then we can get the information later. But you just have to notify us and make sure, and we'll have engagement letter and kind of new client intake done at that point. But give us some time. Don't call 5 o'clock on April 15th and expect to get that done timely, because it does take a little bit of time to process.
Okay, so there's some things to know on that one as well, that yes, it is a phone call, but at the same time, there's got to be some decisions made that if you do owe and you don't pay at that point, it's tallying up for potential penalty there. So how long should somebody expect, or how long does it take to get a refund?
So that system's gotten a lot better, and I think in the time we're today, where you can get within your week or 10 days is really reasonable. Now, early on in the filing season, the IRS has made some adjustments, good or bad in the country. And I think in your world, the word fraud is used a lot, right? And we've seen a lot of that with the Fed. So prior to anything going on currently, the Fed has, in regards to child tax credits and things, they've put in some different timelines. We're not going to release refunds on certain credits until these days, or we're going to look at it for so long to make sure that we're not seeing individuals use the income tax system to create. We've had clients over time, not recently, but had people file returns on their behalf using socials to try to file. So the IRS has tried to put some parameters in place on certain credits and certain amounts that can delay the return, because they're just trying to make sure there's not fraud apparent. So they're doing the best they can. I mean, you got to consider how many Americans are out there and returns are getting filed. They're just grossly understaffed on that. So they just have some computer metrics they're doing to verify that somebody hasn't claimed the dependent multiple times where we're using it efficiently. But they do have some parameters on different credits that they do reduce. But most of the time we see 10 days. But if it gets to be a large refund, they will delay it a little bit. The nice part, oddly enough, if they do delay it beyond tax April 15th, they do pay you interest back to the original April 15th date. So,
Okay, fantastic. So, what documents do I need to file my taxes?
that's a great it depends question. But the best advice, I think, something we inherently as a country did on accident is that important tax information stamp that gets put on the outside of that envelope from the bank that's interest there. Like that is probably the greatest lighter when somebody says that. We can, once we look at your return from a prior year, we can give you a pretty good list. And we do that with all of our clients. Our software does a great job of, if you come in and say, here's my tax stuff, I'm like, hey, where's this document? They're like, oh, yeah, I don't have that yet. So we do a great job of compiling of what we had last year to make sure we get it this year. And we can give you that list if you say, hey, what am I looking for? And we just shoot a little thing there, either an organizer there to let you know what to look for. But the best thing to do for people to look today is just watch that mail right now. January is important. If that says important tax document on it, if it's your bank, most people have a mortgage on their home. Those are coming out from the banks today. Still, a lot of them are still using the mail system. But if you are in the student loan interest, is notorious for you got to log in and get it to download it to get that piece. So make sure you're getting those things. Bank interest, sometimes you have to print them off yourself. Even employers today, if you're using ADP or any of those, they want you to print the W-2s. They're not mailing like they used to.
Okay, I have a question. Jeff, my husband, makes sure that every time I take something to Goodwill or every time we make a donation, he has me jotting it down, putting it in the drawer. So tell me about that. Do I have to have all of that, or what's my leeway?
Yeah. So the charitable piece is very interesting on the side. We generally best advise that you do want to get any receipts that says you're not any goods or services received. But in that case with Goodwill, there gets to a side where you have a non-cash donation. Okay. So non-cash donations have their own variability. There's thresholds of how much you can have in non-cash donations on your Schedule A before we start kicking into other things. So the Goodwill, generally if we're in that 250 and under, your reporting and record keeping, you can keep of your own. But let's say you donated, I've had this individuals, they donated a car to a local nonprofit for deliveries. Well, then they got to have certified appraisals and those pieces. So that's that layer too. If it's just not as simple as, oh yeah, I'm good here, I gave this to Goodwill. If it gets over thresholds, they want signed receipts from the nonprofit itself. You can't just fill it out, because Goodwill is notorious that you fill out that paper yourself and you throw it in there. Well, if it gets over certain dollar thresholds, then your reporting requirements are greater. We've had people donate large value art things to museums, that can be in the hundreds of thousands of dollars. Well, you're getting true appraisals coming in, certified receipts. There's a lot more layers you get depending on where that denomination falls. So if you're doing that, keep track of it. And then when you have those appointments, and that's why we're really big on, we don't want to be a place that you don't see and know your accountant. When we look at our fee and the idea, it's not just about the idea of the fee during tax season. But if you have those questions during the year, hey, I've been doing this, call, ask a question. And that's what's kind of part of the retainer, what you get, not just during this 90-day window of tax season to get your return prep, but it's a kind of a retainer for an entire year. You have an accountant and a team behind you that if anything comes up, you inherit some money, if there's a life-changing event, you have a child, whatever it may be, you're selling a house, buying a house, whatever comes to your plate, you can get those questions answered before we just get to tax season. We're going to talk about it. You can go through and say, hey, this is what I'm working on, or you get a new job and you're worried about the withholding and the W-4 and how it's changed and how am I going to withhold to make sure, hey, I've owed last year and I keep owing and I don't understand why I owe. We can give that analysis to make sure that we're putting you in the proper position in tax season, that we're not reactive or we're dealing with an end result that we have no direct effect.
Well, I appreciate you sharing that. Our philosophy is, having a professional in your court is such a key piece. And oftentimes people look at tax preparation as just that preparation. It's a one-time event. But the reality is almost every decision that you make, at least from a financial perspective, has an implication. And really what you just shared there is, and I can think of a story with, when people are signing up for medical and they're getting advanced tax credits to go along with that, those all make an impact in the decisions and how you have your world set up. And so you could, as you probably look through the lens of taxes all the time, but having a professional that you can call in the moment is such a key value add. And
Yep.
again, that's one of the things we certainly appreciate about our relationship with you and having a
Yeah,
professional.
and the medical net premium tax credit's a critical world right now. I mean, people and we didn't even really see or insight that Congress had extended and changed some of the rules and the paybacks, the amount of credits people were getting. One of the big provisions they had was if you had taken a larger premium tax credit than you should have, and you were going to pay it back, they had changed the thresholds of the AGI and the limits of how much you had to pay back. That has now since expired, and they're having discussions at Congress about what that's going to look like in the future. But let's say they cap that number at $2,500. We've seen as large as $20,000 premium tax credit paybacks, but they may look at AGI and change the number and say, well, we're only going to make you pay back $2,500. Well, some of those COVID area provisions are gone. So you don't want to come to tax time with those premium tax credits and say, hey, you owe $20,000 because you took too much of a healthcare credit. And unfortunately in that world, and with your guys' guidance better, but we've had people call them and say, hey, do I need to include my spouse's income? They're like, no, don't include. Well, I don't work. Oh, so they give them a full credit. Well, the spouse is a successful individual and has quite a bit of income, and then you're paying this full thing back. And so I worry to see if those get back to where it's at. Right or wrong, the policy is not the piece, but just where it's affecting people's lives. You don't realize that, oh, I took that credit and they've been capping my payback. If that cap is gone and it changes, you could end up with, I mean, we're not talking small numbers. And when you're on the premium tax credit, traditionally not a situation, you're going to have $15,000 to $20,000 cash on hand to return at any point in time.
Such a good example, and that's one that I see on the medical side or our health support that we offer. So thank you for always the real life stories make such an impact, because that could be me is what a listener might be saying. Question number 7 here. What tax credits do I qualify for? That's one of the most common that's out there.
Yeah. So what we're seeing, normally the simplest ones on that side are going to be on children or not, where dependents are at. So they've changed the child tax credit is up now $2,200 per child under the age of 17. So it's one of the weird laws and provisions that we can get to, especially when you've got kids in high school. When that kid turns 17, that credit goes from $2,200 to $500. And so that's where we see they're like, well, man, my senior year, my kid's like the most expensive it ever it is. And so we always try to make sure and give people heads up. That's the benefit of having a provider like ourselves there, that when we give that return back, we're saying, hey, next year, if nothing changes, your return is going to change $1,500 because the credit's changing. So there's energy credits have kind of gone a little bit softer from where they're at. It is based on individual. And so that's what the tax return appointment is so critical, because we have, based on our intake sheet on the back, there's probably 40 questions on there. And it goes through to try to determine what credits you're eligible for, because there's sometimes credits people that are eligible for, they may not realize. Let's say dependent care credit, and you got daycare expenses and you're going to get that back. There's a lot of things out there you may not realize that the interview is crucial that you can miss. And they're trying to do that through yes/no questions online, but it's kind of tricky to know if your eligibility is right.
I agree. It's never as black and white as it may seem. And life stages really make an impact. As you move into retirees, might look different, where child tax, credits don't impact you anymore. And so understanding as you age, so do those credits, they look a little bit different. So what happens if I don't file my taxes?
We wish it was probably quicker than because it would help with compliance. But the issue is today, if you don't file, it stays out there. So the IRS's position is that you have 3 years, same, you remember we have this 3 years to file a return. It's the same once you file. So let's say April 15, 26, I'm filed for 2025. You have 3 years from that due date that is an open return with the IRS for audit. After that point, that return closes. The audit period where the IRS considers that return open is 3 years from the later of when you file or the due date. So it's not, I didn't file by April 15th to 26. I'll get to April 15th to 29, 2025. They don't care about, no. That clock has not started yet because you have not filed. So traditionally the people that get behind, and it usually starts with you owe a little bit 1 year, so you kind of drag your feet and you don't file, and it kind of goes on. That IRS's compliance window, they're probably looking at 10 to 15 years, and then they start, what they will do is file a return on your behalf. And when they file a return on your behalf, you do not want that. If you're a married individual with kids and they file a return on your behalf, they're going to file you single filing status, no dependents, and the penalties and interest just get away from you. So if you owed $1,000 by the time they address it, that 1,000 is turned into 10. And And that's what gets guys really buried. So if you have an issue where you're worried or you owe, we definitely are firm about let's get filed, let's get on a payment plan, let's address it, because it doesn't go away. That clock never starts. And the IRS eventually will file the returns on your behalf, but it literally is 10 years in arrears. And then they just start kind of clicking them in, and then those letters start coming in, they start garnishing the employer. And it can be, you're talking pulling you into bankruptcy, as debilitating it is if you do not address your tax situation.
And so that leads me to question number 9 is, can a tax preparer help me with past taxes?
Yes. Oh, for certain. We had definitely a personal family member of mine when I first started, and I'd been here maybe 6 months. They're like, hey, I haven't filed in a while. And I'm like, okay, what's that mean? And it was 10 years, and so we can go back. That's a nice part about our software piece. It's all there. And then in those situations there, we like to get a power of attorney in place. And that's the nice part about being enrolled agents. If the IRS has questions or inquiries, they have to go through us. And so you get kind of a layer of a benefit that you don't have to deal with them directly. And that's the goal there. But yeah, I filed as much as 10 or 12 years at once. And there's some things that we've learned over the years on that to make it better, but they are paper processing. It just takes a while. So making sure that you can go through there. But yeah, but the thing is, if you haven't filed, that clock hasn't started, so and basically where the federal government's at, they have so much on their plate and what's going on. They're willing to wait. They're going to wait. They're going to wait you out. They're going to say, all right, this guy hasn't filed it. You're not hidden. And when guys think that they can kind of slide around, your employer, you're getting 1099s. When they send you a copy in the mail, the W-2 from your employer, we are also required to send a copy to the IRS and whatever state you're working in. So the state and the Fed have copies of what you have. You're not in this system, well, I didn't say anything. They didn't really know it. They know everything. And so what we do in those scenarios when we're that far back, we do information return requests with the IRS. They give us copies of all the W-2s they have, because likely in compliance, you've lost these documents. We don't know where we're at. So I joke they're kind of fun returns to prepare, because you know what the IRS knows. So it's kind of like doing a test with the answers. But it is hard. And inevitably, when you have that, you lose deductions, right? Because you're not going to have all the documents. We're just trying to get the income things reported and do the best we can. But you're not going to have maybe all your medical expenses from 10 years ago. They're not going to have that document enough. We feel comfortable on the return. So yeah, but it can be debilitating. I've had definitely over 10 cases in my career where that comes in. And I always tell people, if you're in that spot, don't feel negative about it. Like, it's okay. Other people are there. We're not going to judge you. We're going to come in, get it knocked out, be professional, help you through this process, but don't avoid it, because it will not get better. I cannot commend that as much as possible. Now, if you had refunds for those years, you're going to lose them, but it's still important to get them filed so we know that we're done, and the IRS knows, because they have a list of everyone, but they just have a lot going on where they're not going to come knock on your door at April 16th if you didn't file.
Yeah. 2 things you said there is, you're not the only one. There's others that have done it, and having a professional like yourself sit between, the individual and the IRS, that just gives peace of mind, is that you don't have to have that personal interaction. And clearly you've done this and know the path. And so I'm going to bring us to our number 10 here. The number 1 tax-related question retirees Google is, do I have to pay taxes on Social Security?
Yeah, we love the Social Security piece, because what inevitably happens is most people think about Social Security as, when can I take it, right? Mm-hmm. So they're going to Social Security office, and there's that 62 number was there forever. It's kind of gradually changing. So they know if I take it early at 62, I can only earn up to this amount before it starts reducing my Social Security. So that's what everyone thinks. So when they go into Social Security, they go, oh, I'm full retirement age now. I don't have to worry about taxes on my Social Security. Well, no, it's not going to change your benefit. The taxable Social Security point, we'd like to see adjustment, but it just hasn't. So what it works on the side is they look at half of your Social Security plus your outside income. If that gets over certain thresholds, then your Social Security starts being taxed at 50% and then max at 85%. Unfortunately, those numbers have not been AGI adjusted my entire career. So we're looking at, let me pull up, and get an exact number, because I think it's on 25,000 and then 32,000 is where it gets 85%. So you're taking half Social Security plus there. It's not very hard for Social Security to be taxable. What we have seen, and that was a big discussion during the election on taxable Social Security, that was a big thing, right? We don't want to tax people's Social Security for the Fed. What they basically settled on, yeah, that's how it is. It's 25,000 and under, when we look at those thresholds of combined income, not taxable, 25,000 to 34, 50% of the benefits become taxable. Once you're over 34, this is on individual, not married, filing joint, it's 85% taxable. Those numbers, unfortunately, have not changed over my entire career. So an individual at 34,000 of combined income, that's half of Social Security plus outside source. Most pay tax on Social Security. But what they have added this year is the senior deduction. If AGI stays under certain thresholds, then you get a $6,000 per senior additional deduction. That was kind of the split through the one big beautiful bill act, was that, okay, we can't afford not to tax Social Security because there is quite a bit of federal income tax being generated from it, but we're going to give a deduction to the ones that maybe are a little bit lower income. But that threshold starts at 150,000 where it starts to phase out. And in today's time, that's just not what it was. So unfortunately, they haven't. I would like them to see the taxable table thresholds get changed with AGI or inflation, but they just haven't. So my entire career, but that married filing joint, the 85% taxable number is 44,000. Anything you have combined over 44. So that's just not, I mean, it's hard to, I mean, if you're living in any areas at 44,000 of income, come with you, husband and spouse for a year is not a terrible amount of income. So most pay tax on Social Security. Now, if you're Social Security only, that's all you got. You don't even have a filing requirement because you don't have taxable income. If that was literally all you had, you will not pay tax on Social Security. So the Social Security is kind of weird. So what we end up with is, let's say an individual has not had tax on their Social Security before. They don't even have a filing requirement. But you decide, I need to take a little bit of money from my IRA, and now I'm starting to trick into taxable income. What you end up with is, let's say we're in the 50% taxable Social Security area, and I'm going to take, let's say, for example, 10 grand out of my IRA, but it's going to create my Social Security to be taxable. So now that 10,000 may have increased your taxable income 15,000 because I added $5,000 of taxable Social Security and 10,000 of my IRA. So the tax on the IRA ends up being a pretty significant percentage because I'm paying tax on 15 when I really only got 10,000 additional income. So that's where the pre-planning and making sure you know where you're at in your taxable Social Security, because until you get to 85%, if you're in that threshold, the tax movement is massive of what we see. Now, a lot of states, Kansas is one, they don't tax Social Security anymore, so we're not seeing that negative effect. But when you're in that taxable Social Security before you get to 85%, additional income sources, you could win a little scratch-off ticket and increase your taxable Social Security and grossly, and like you almost feel like your tax is 40% of the withdrawal you get because you're paying $15,000 of taxable income, even though I only took 10. So even at a 15% rate, that number starts to be pretty significant where you're paying $2,500 or $3,000 on a $10,000 withdrawal, even though you're only in the 12 or 15% rate. So taxable Social Security scares me sometimes in that threshold as it works back and forth.
Yeah, and I'll expand on that just even a touch more. It's usually Social Security, RMDs, and Medicare. Those are three areas that are first-time experiences for
Yeah.
people once they retire or around that age. And so it becomes so critical. You said it, that the planning piece of it is fine if you are moving through life and you haven't worked with a financial professional, because so much of it is the accumulation and you're not running into these withdrawals, which then so critical in impacting the tax side of things. And so, it oftentimes is younger, you are accumulating and you're doing your own taxes, but that really shifts the older that you get and as you move into that retiree age.
Yeah, and interesting with the taxable Social Security piece, and it's kind of odd with the Fed because they're not this way on most things. They naturally, if you go into Social Security office and you file, by default, they don't withhold any taxes. You've got a request. It's called a voluntary request, W4P, with Social Security. Hey, I need to withhold some taxes on this. If you go in there and you file for your benefits, they're going to pay you 100%, but they're going to withhold no taxes. So, and even more oddly enough, if a state taxes Social Security, and Kansas did for many years, they don't withhold state taxes and they won't. They just don't do it because they're not going to deal with it. So you have to pay estimates or stay on top of that to make sure. And your other income sources that we're offsetting also the Social Security income. But it's very interesting with the Social Security. I think that when you first sign up, like you take a distribution from your IRA or a pension, they're going to have you fill out a W-4 and make sure they're withholding. Social Security does not. You go in there and just file. They say, hey, if you're responsible to do this on your own. And they're also odd. They want a percentage. It's kind of an interesting. They don't have you fill out married, single, married, zero, what we're used to. It's the first time in your life. They're like, what percentage do you want? And it's like 7, 12, 15, and 22. Well, some guy goes, well, I'm in a 10% bracket, so I guess I'll do 10%. Well, that actually ends up being a little bit over withheld because you have your standard deduction to come into play. So we always advise clients, if you're going to be starting Social Security, when you sign up there, get an idea what the monthly benefit's going to be, when you're going to start. Let's prorate and think what that's going to affect your tax return. Do a projection. And a lot of this we're doing during our appointments, that will come into your appointment, but there's a tax projection worksheet we can also work on for the next year's taxes. And when we know that life-changing events are happening, that we can make sure that in April or March or February of this year, we're projecting so at this time next year, there is no surprises.
Well, if this question didn't just prompt a little bit of, oh my gosh, there's so much that I might not know. This could be you on any of these questions, though, that you are not behind. These are the top 10 questions coming from Google, and most mistakes come from assumptions, and early conversations really can reduce stress. And you think about what your time is worth and how working with a professional, you get the answers plus, probably a whole lot more along the way as once you go down the path. And so,
Yeah, and that's our hope, is that we look at in a community and as a country, or however you look at it, that I don't know how to do my own plumbing and heating and air. I'm not trying to fix my car, but as together we form a large community, and that's what we're here for. I mean, if everyone was dialed on this and everyone felt really good, businesses like ours wouldn't exist, right? So you're not out there on the only side, but we just want to be a resource to be there. And then hopefully, especially when you're a community, if you have a business that we can lean on or work through, we don't deal with financial investments. That's where your guys' specialty is. We believe that work with that person that's focused in that area. And then when I need at my home, I don't try to do DIY my own plumbing and try to bring in a guy that knows what he's doing. And I try to understand so when he gets that fixed, but that's what we believe. There's just specialties. There's so much change. I mean, even when I first started, I was a graduate at EA. I was overwhelmed with the amount of tax law. And I remember Kevin and Joe Simmons, who I bought the firm from, I was like, how did you guys learn all this? And they're like, well, here's the positive. The rules change so often. Some of the stuff we know you might as well forget because we're not even doing that anymore. And that's what we've seen. Even in my career, there's so many things we used to do that the rules have changed. Even this year, it's significant. We probably spent up to 30 or 40 hours on CP just on the new build that comes through to make sure that we're ready and to come through. And so our goal is to take that stress off your plate, that if you have a resource or any question it may be. I had someone called the other day, hey, that senior deduction, how do I claim that? Even though we're doing their tax, do I need to tell you that on there? I'm like, nope, we're handling that for you. And that's the assurity you want to provide. Nothing when you're buying a home, use a realtor, use a person that's experienced to make sure that transaction thing goes important. And your taxes are so critical, because if you get on the wrong side of the IRS, they're the judge, jury, and executioner, right? There's no accountability board above them. So you've got to make sure that you stay in compliance.
Well, fantastic, William. We certainly appreciate your expertise today. And so let us provide you a complimentary tax preparation proposal so William and his team can file your taxes this year. There's no obligation. At least let us get you a proposal. If that's of interest, you just email us at info@paladinfinancial.com. And as you can see, everything that we've talked about today, filing is a moment in time, but planning is really the opportunity and the depth that goes along with some of the answers William gave us. So taxes should support your goals and not surprise you. And we're 100% believer that taxes are just a really key piece in the bigger financial picture. So with that, we will wrap up today. If this episode relieved just a little bit of stress, then maybe we did our job today and did some education. And again, that's a big part of William and his team and what the Paladin Financial team believes in. So taxes don't have to be scary. You don't even have to understand them yourself. That's where you bring in a professional along the way. And so if you're filing your taxes this year and want just a little bit of clarity, certainly reach out, ask your questions, and don't wait. We'd love to get in touch with you. So you can reach us at 651-842-8406. Also email us at info@paladinfinancial.com. Certainly follow along all of our social media, and our website is paladinfinancial.com. Thanks for listening, and thanks for joining Paladin Financial Talk. We'll see you next time.